Secure your dream home fast. Pre-qualification versus pre-approval versus commitment. Pre-qualification, a starting point. Pre-qualification is the initial step where you provide a loan officer with a general overview of your financial situation. This includes your income, debts, and assets. For example, you might share your annual salary, outstanding student loans or car payments, and any savings or investments you have. It is important to note that the information provided during pre-qualification is usually unverifiable, meaning the loan officer relies on the accuracy of the information you provide without conducting a thorough background check.
Trust me.
Based on this information, the loan officer will give you an estimate of how much you might be able to borrow. This estimate is not a guarantee, but it helps you determine your price range and narrow down your home search. Imagine you are considering buying a home in a city where the median home price is $600,000. By getting pre-qualified, you might discover that you can afford a home in the $500,000 to $700,000 range. This knowledge helps you focus your search on properties that fit your budget, saving you time and effort.
Nice.
Pre-approvals, a more thorough assessment if you are serious about buying a home. Pre-approval is the next crucial step during the pre-approval process. Your loan officer will thoroughly review your financial information, including your credit report, tax returns, pay stubs, and bank statements. They will verify your income, assess your debt-to-income ratio, and determine how much they are willing to lend you. This process is more involved than the pre-qualification, but it gives you a more accurate and credible assessment of your borrowing power. For instance, let's say you have been pre-qualified for a $600,000 home loan. When you apply for pre-approval, the loan officer discovers that your credit score is lower than initially thought, or that you have a higher debt-to-income ratio. As a result, they might pre-approve you for a lower loan amount, such as $500,000.
No, God!
While this might be disappointing, it is better to know your true financial capabilities before falling in love with a home that is outside your budget. Having a pre-approval letter also makes you a more attractive buyer to sellers. In a competitive housing market, sellers often prefer working with pre-approved buyers because it demonstrates that they are serious and financially capable of following through with the purchase. It is like having a seal of approval from a lender showing that you are credible and a reliable buyer. Commitment, the ultimate competitive edge. If you want to stay ahead of competition, getting a commitment from a direct lender is the best approach. A commitment is a written confirmation from an underwriter that the bank will advance the specified, usually as a mortgage loan, enabling the buyer to complete the purchase. The pre-underwriting is done by an actual underwriter, which is a significant difference compared to a pre-qualification or pre-approval done by a loan officer. A commitment holds more weight than a pre-approval and will help the buyer get their offer approved. Secure your dream home with a commitment. If you want to get into contract within the next 90 days, obtaining a commitment from a direct lender is the most effective strategy. A commitment backed by an underwriter's approval demonstrates to sellers that you are a serious and credible buyer, increasing your chances of securing your dream home in a competitive market. Start your home ownership journey by getting a commitment from a direct lender today.